Okay, great. Hello everyone to this new webinar for today's 10th of December 2020. Okay, hello Brian, Manuel, Saeed and Anwar and many others that there are now in the Monica as well. She's a new one, new member, and I guess others are there. Okay, good. So you know how this works. I'm gonna go through some charts using the rules, and but first of all, I would like you to think of any scenario that you are struggling with or any questions that you may have by having looked at some of the analysis that I have posted lately, and we'll go over them. I mean, any stock, I don't know, commodity index, anything is allowed. Okay, so whatever you whatever you want me to look at, just tell me. I'm reading micro gold. Was that Brian? You want me to look at gold? One sec. Gold, micro gold futures. What's the ticker for that one? All right, Brian. First of all, let me one of you send me an email with this question. So I'm gonna go quickly over this, and then once I'm done with that, I will take a look at MGC. Okay, Brian? Okay, good. So first of all, one of the members said, is it possible to go long at a daily wow demand zone as set and forget with the following situation? Monthly up, weekly out of alignment, daily just met wow and with bullish trend line. Well, but this person is not specifying on which time frame is the bullish trend line. But what I can tell is that if the monthly is up and the weekly is out of alignment, that means that the middle time frame is out of alignment. In order to go long, you need a monthly demand in control or a bigger time frame confluence, like for example, the weekly trend line or the monthly trend line. The daily trend line is not enough. I mean, if we have, like for instance, we don't have a chart here, but if we've got the monthly is in an uptrend, weekly is out of alignment, so it means longs at monthly. We need at least, this is the weekly or the monthly trend line, okay, in order to wait for the daily to create a new area of demand. A daily area of demand created out of nowhere without the support of weekly and monthly confluences is not a valid high probability setup. Okay? Okay, Diego. Daily. Okay, the daily is not enough. You understood what I said, Diego? We need weekly or monthly confluences or demand zones to wait for the new daily demand zone. Out of nowhere, it's not possible. Nested at monthly demand, yes, that's possible because the weekly is out of alignment. So if the weekly is out of alignment, you need a monthly time frame. Okay? It should be nested, or if this is an area of demand on the monthly, price reaches the monthly area of demand and starts to react, then you can take daily areas of demand on the way up as long as the daily trend line is still up. If the daily trend line is still up, then you need the weekly. If the weekly is out of alignment, then you need the monthly again. And you repeat that scenario over and over and over again. Okay? So on gold, you are asking me at the end of November for this weekly CP, why it was not acceptable to go long if the monthly was up. So let me show you. I think I've got your post over here. You are referring to this weekly area demand over here, Diego? Okay, that one over there? Yeah, so let me go take a look at it for you. Here, I'm going to zoom in a little bit, okay? The weekly was out of alignment. So, hello, El David. So if the monthly is up, okay, and the weekly is out of alignment, that means that you need the monthly demand zone in order to go long. The answer to this question is the same one that I gave you for the other scenario, the daily wow long. Makes sense? If the weekly is out of alignment with weekly supply zone, you need monthly demand zones, not only the weekly, that's why the weekly is not allowed. I mean, it would have been great to go long here, the weekly, right when price was trying to hit it there. But once price hits or is approaching the weekly area demand, we have all these candles that consolidated away. That means that this is not a set and forget area. You need support of the monthly demand zone, Anwar, like Anwar is saying, okay? That's the beauty, the power of the realignment concept, okay? Sometimes levels that are not aligned, or you need to wait for the monthly area demand, okay, good. But sometimes one of these levels will play out, and then you will start doubting the rules. You will say, okay, but now the rules say that we need to wait for the monthly. Why did this weekly area demand played out? Well, I can tell you, my friend, what I can tell you is that if I've tested this scenario thoroughly, I mean, monthly, weekly, daily, or 3 time frames, once this gets out of alignment, you go to the middle. Once goes out of alignment, sorry for my mouse, I've got something in my teeth. I went to the dentist and I cannot speak very well today, okay? On the monthly, okay, so that's a realignment. Daily out of alignment, you go to the weekly. Weekly out of alignment, you go to the monthly. Sometimes the middle time frames, even being out of alignment, will play out, but those are exceptions. Those are not following the rules, okay? They might play out, but if you want to have a set of rules, mechanical set of rules that can be repeated over time in any scenario, then you need to follow that. If you are trying to do something else, then you have to test those scenarios, okay? And as you can see in the website, the community, when I share analysis with you, those levels are most of the time, that's how the markets play out, okay? Okay, good. Yeah, Diego is saying this was a very interesting case because price just overshot the weekly CP demand zone and went up. Yeah. Let me take a look at the charts, at the live charts right now. Gold. Like this one, for example. Yeah. It overshot it, but now we've got supply. If this is eliminated, okay, demand, then now we've got supply in control, and this could happen. Having the level overshot is normal. I mean, if it is not a valid level, then okay. And then we have an opposing level at the right above if we have consolidation away, and we did have consolidation away here. So we've got supply right now is in control, then price might continue to drop all the way down to monthly demand zone. That's gold scenario right now. And if you take a look at the 3 months, look how gold is losing steam, okay? Super strong rally on the 6 months. So these 6 months this candle might end up as a pink candle, or even, well, I don't think it's going to close underneath, but a bearish pink candle, a shooting star, almost for sure. So this is telling me that gold is probably doing this. Probabilities. Look at the 12 months. Super strong rally. So that might happen, okay? We don't know if that's going to happen. What we do know is now that the weekly is in a downtrend, and we need demand zones on the monthly to go long with higher probability, okay? Could we enter on confirmation in that weekly demand zone? Where? This one over here? Manuel? Confirmation would have been nice, yes. But even if you wait for confirmation there, then don't expect that level to hold to those demand zones. If this level had not been overshot, we still have this super strong rally. And that's probably going to happen. So confirmation there is not the right, it's what we use to depict the picture of a new imbalance continuing the prevailing trend. But in this scenario, it's not a good idea to wait for confirmation at all. It's like, for example, I was going to show you on the Aussie dollar. So why am I saying, well, price is rallying, you have to go long on new areas of demand and all that, supply is going to be eliminated, this is going to be eliminated probably, it happened, etc. We were waiting for the retracement, it didn't happen. Okay, why? Look at this, my friend. 12 months demand zone, 6 months demand zone. Look at the pink candle on 12 months. Look at that one on the 6 months. So what do you think is going to happen to monthly areas of supply when we have a super strong area of demand in control? Make sense? So when you look at the bigger picture, it's going to throw light on the smaller picture sequences and timeframes. So even though you may think that this is a great imbalance, that doesn't mean it's going to hold. I mean, price, it didn't even pause. I mean, just broke it without thinking. I mean, without a single pause. Why? Because we have that strong area of demand. Okay? So let me read you, Anwar. What about going short at daily with confirmation? You can do that, yes, but that will be against the trend. You mean this one on gold? Because we have right now the weekly area of supply in control, but that's against the trend. So are you a counter trend trader? Well, you answer that question for yourself. So if the 3-month sequence uptrend, 6 months uptrend, 12 months uptrend, monthly uptrend, the weekly now is out of alignment. So are you the one playing short on the way down against the prevailing long-term bigger picture bullish bias? I'm not that guy. I used to be that guy. I'm no longer that guy. Okay? So are you patient enough to wait for monthly area demand? That's something that you have to answer yourself as well. I am. And that's why I'm trading these bigger time frames. And as you can see, Anwar and all the others right now in the chat room, you can see hundreds and hundreds of bigger time frame areas of demand, 3 months, 6 months, 12 months, playing out nicely. And if you are patient enough, you're going to be able to make a lot of money. As simple as that. If you want to trade counter trend, make sure, let me ask you one question, Anwar, any others right now in the room, okay? If we are waiting, if you want to go long and using the trend, okay, you need a basic structure, okay, with several candles, whatever, and then we have 1 ERC and 2 ERC at least. Those are the rules, okay, aren't they? We need 2 ERCs, like, okay, that's what we need. So for to trade with the trend. So don't you think that you need, in order to go against the trend, you need something as strong as this picture or even stronger? Make sense what I'm trying to say, everyone? You need, if you're going to go against the trend, you need at least a super strong level, even stronger than those that are created with a trending market. So is this weekly area of supply stronger than this one that was created with a trending market? Davi, no, it is not. So if you want to give it a try, if you want to give counter trend shorts, or in this case, counter trend, in this case, shorts, a try, shouldn't you be leaning on super strong levels? That's what this is an open question for you. You have to think about that, okay? So it is super expensive, so it is probably it's going to drop lower. This is all-time lows, all-time highs for gold. I mean, the highest price that gold has ever been, okay? Okay, good. So having said that, I was going to take a look now at Bitcoin, Manuel. You see this one at the top of my list? Okay, so I'm going to take a look at Bitcoin, and then I'm going to take a look at the one that Brian mentioned, micro gold. Okay, I didn't even know that this one existed. But it's the same picture, isn't it? Yeah, it's the same one as gold. So, do you, Brian, do you have any other questions about this one? Because this one is just the same as gold, more or less. Okay, we'll go back to it if you have any questions. Long and weekly, I'm wondering if I should have. I mean, you are long on this one. that one over there, still long on that one. Well, the answer, I mean, the analysis is the same. This is a micro gold. I guess it's cheaper than buying the other one. But look at this one. We've got a super strong area run over there in 6 months. So this is from, this candle was created in June, started here, bearish pink candle, very strong rally, demand is over there, losing steam. So maybe it's not the right moment to go long. If you are long over there, protect your position because this daily average demand might be taken out anytime soon. It is aggressive. So do not expect price to, hold. Well, this could happen. Price could rally all the way up and break the 2080 mark again, all-time highs. Obviously, that could happen. It's a possibility. We cannot negate that possibility. But is it what it usually happens? No. After such a strong rally, we need a bigger retracement. So trying to buy and hold a trade when you see bigger time frames in the middle of a correction is not a very wise decision to make. Make sense, Brian? It's not a very wise decision. Maybe for short-term trading and all that, swing trading for a week or two, yeah. For holding long-term, it's not a good idea because if you take a look at the Aussie after such a strong bearish impulse, okay, well, it's not the best example. We are waiting for a bigger retracement. We have a bigger time frame, but it's not an example. But let me take a look at Bitcoin, okay? You gained half, but was hoping to for 2 to 1. Yeah, like I said, protect it. Don't let that area, try to become a loss because you are winning right now. So protect it. Okay. So right now, let's take a look at Bitcoin. Those that have been, this level I drew like that. Ideally, the rules say that you can draw it like this. Okay. But sometimes price will not retrace. So once price is within the surroundings of these, let's think of this, of the imbalance like having an aura, okay, an aura, like the angels and all these beings, okay? So the aura could be something like surrounding, okay, the price action like this. So once price gets very low, very close to this range of attraction, these, like let's say like the electricity or the electrons surrounding the atoms and all that. So once it's getting very, very close, forget about going counter trend shorts. If you are not a counter trend trader, then you shouldn't worry about it because you are not thinking of going short on Bitcoin on the way down. You should be thinking of going long. But right now, Bitcoin is very expensive. The most expensive price ever in history. Broke all-time highs a little bit, and this is very common to break all-time highs, tested, and then, I don't know, who is silly enough to buy Bitcoin after breaking all-time highs at $20,000 per Bitcoin. I wouldn't be that, I'm not going to say stupid. I don't want to insult anybody, but it's very silly to buy when something's so expensive. I wouldn't. So if you've been in the community for quite a while, when price was around there, I was saying no short, long, we have to go long when price reaches that monthly area of demand. Okay? Yeah, well, in Bitcoin and WAR, everything is expensive. So I'm not trading Bitcoin at all. No, not a single cryptocurrency. I'm just trading stocks and that's it. Okay? I don't care about this. I'm doing the analysis for those I know that Troy and many others trade Bitcoin, but I'm not doing that. Okay? So when price was around there, I remember there was a guy that joined the community. He's no longer in the community, I believe. And he posted something like a chart of the psychology of a trader and all that. And Bitcoin was exactly doing that. So we were saying we can go long only when price hits that area. So after those analysis, you can check Bitcoin analysis in the community. I was saying all that all the time. When it reached that area, I said, now you can go long. And there it is. When price was there, okay, you can check also in the videos and the thread. I was saying after 1, 2, 3 ERCs, we have to wait for the beginning of the move, which is another area of demand One sec, sorry. This trend line break here. So we had another area of demand right there. And hello, Octavio, welcome. Bienvenido. And then there it is. Another, it kissed the proximal line and then rallied. All this is recorded, so you can check all those videos and the analysis. This is not, as you already know, in the SellAndForget.com community, in the community, we are not posting trades after the fact. Sometimes we do because we miss the trade and all that, but that's something that is not usually done. So here in Bitcoin, yes, and they work perfectly most of the time. Not always, obviously, because you cannot create a strategy where every single setup works always. That's impossible. It's not a single strategy, and supply and demand, and this particular strategy about supply and demand is not an exception. So there will be losses as in any other strategy. So I will read your question now, Luca, okay? Let me finish with the Bitcoin example, okay? So we've got one area of demand on the monthly created, very strong rally. This is a very lucrative trade, strong reaction. So now we have 1, 2, 3 ERCs, retracement to the origin of the move, very lucrative trade, okay? And now after such a strong rally with Bitcoin being so expensive, if this candle here consolidates away, that means that if this candle stays like this at the end of December 2020, 31st December, that will mean that this imbalance is confirmed. And this is where the high probability trades happen. On the way up here, this is too expensive, and after such a strong rally, usually price goes or moves to the origin of the move, right to the origin. So instead of playing shorts and longs on Bitcoin and smaller time frames, I just prefer to wait. Well, these imbalances, will I have to wait for 2 months or 3 or 4? I don't care. I've got a big list of stocks and assets to look at. So it's not a problem for me. Okay, so Manuel, same here. So Alfonso's analysis back in March saying to go long at that monthly imbalance, mind blowing. And that's it. I mean, that doesn't mean that I will not make mistakes or the levels will not hold and I said they would. I cannot control the markets. So, but what I can tell you is that most of the time the markets behave in the same way. And if you go back to the 70s, the 80s, the 90s, 2000, and you look at the American stocks, Forex, whatever, this is exactly the same. This is a strategy that works no matter the time. I mean, how old the stock is, how young the stock is, if it is an IPO, recent IPO 5 months ago, it doesn't matter. It works. As simple as that. Any asset. Let me read now. Any questions about this? So, do you want to play shorts on the way down? No problem. Okay, up to you. But if you want to play, to buy Bitcoin or to trade Bitcoin, isn't it better to wait for a strong imbalance and then from there wait for new areas of demand? You want to trade the 5-minute charts? Go ahead, but do it when price is reacting to a very strong area of demand. That's my suggestion. Okay. Okay. Amit, is this potential demand or CP a valley? No, this is a CP. This is not a valley. Okay. This is a basing structure. This is another basing structure. This is a valley. Okay. This is a valley. This is not a valley. Okay. It's a pause in the market. Okay, Amit. This is if you are the indicator object tree, this one over there, you see the dot in the middle? That means it's a 50% candle. This is not a failed ERC. So this close is, the close of this red candle is within the range of the mother candle. So you have to lean on very, very obvious swings, highs and swing lows. So this is very obvious. It's like a V shape. This is very obvious. This is not obvious at all. It doesn't mean, I mean, quite low, but this is not. I mean, now let's squeeze the chart a little bit. I mean, do you think that this is a correction? This is a valley? Take a look at it. Can you tell me if that is a valley? Would you tell me that it's a correction? No, now it's clear. Same thing. If you do like this, okay, you stretch it like this, then you will say, yes, this is a valley, okay? Of course. But you are distorting the reality, okay? Because the reality is that you have to have all the normal scale, okay? And you have to read price action. And if you read price action, okay, and you add the 50% indicator, you can see that the distance from the open to the close is smaller than the distance from the high to the low. And that's a 50% candle that is ranging between, is contained within the mother candle. So it is not a valley. This is a valley, this is a valley, this is a peak, this is a peak. Anything else is not. Good? Any other questions about Bitcoin? So we can move ahead and go to the dollar index. Okay, good. Let's take a look at the dollar index. One sec. Let me read the question asked by Luca. A question regarding Forex. Would you always consider dollar index before trading USD pairs? Yeah. Let's say, if for example, the price is on a strong monthly on the dollar index, would you consider to find sell opportunity? No, I wouldn't do that. It's like the indexes right now. The S&P, Nasdaq, Dow Jones, Russell 2000, and then if you look at the European indexes, DAX 30, CAC 40 in France, the MIB on Italy, all the indexes are bullish and breaking all-time highs. So why are you going to think of selling short a stock? Why? It's ridiculous. It's like going against everything. So the same thing for the dollar index. If we have the dollar index dropping and dropping and dropping and creating near supply, buying dollar cross pairs is suicidal. As simple as that. I don't think that I will be buying opportunities, strong buying opportunities in the dollar cross pairs when the dollar index is dropping. If you take a look at the euro dollar, it's rallying, breaking highs, the Kiwi dollar as well, the Aussie dollar as well. And if you take a look at that, then you will see that you shouldn't be thinking of going long on the dollar cross pairs. So if there is one exception and you have, like, for example, I think it's the dollar ZAR, South African Rand, approaching this area of demand. So do not set and forget over there. Wait for near areas of demand. If you want to use the dollar index as confluence or as a correlated asset to trade the dollar cross pairs. Make sense? Did this answer your question, Luca? Okay. So the best example can be is right now the indexes. Okay. If all the indexes are rallying and breaking all-time highs, would you consider selling short stock? Never. Don't do that. Okay? Don't do that. Even if the short opportunity is super, super clear. Focus on one direction. So we could use the main indexes as a direction. So if everything is bullish, that's what I'm going to do. Buy. Wait for buying opportunities. Momentum up, like David said. So now we have Pfizer with all these vaccines and all that. So if you in the UK, there are already people that got the vaccine already. So this is helping Pfizer to go higher. Okay, so it is creating new area of demand here on the monthly. Okay, and we've got a weekly area of demand here being already created, I believe. So this all-time high is going to be broken. So unless a few people die with the vaccine, I don't think Pfizer is going to drop. Okay, this is all good news. It doesn't really matter if a couple of people die because the investors are really interested in Pfizer. Pfizer is not going to go bankrupt if a couple of poor souls die. Okay, would be a shame, obviously, but that's not going to change the investor's mind. We already have 6 months area of demand in control, 12 months area of demand in control. So long bias. Look at the bullish impulses. So longs are near demand. As simple as that. That's Pfizer. You take a look at Moderna, which is another biotech company. Look at that one, my friend. So here we've got another area of demand on the monthly, super strong. Okay, so I would be interested in buying down there. This is a little bit more aggressive. Okay, could play out. It will depend on how price approaches. Okay, but we start getting here like a bearish engulfing pattern on the monthly and all that. Wait for the origin of the move. So the thing is that you may be thinking now, and I've read Monica saying, "Wow." Because of price action, maybe, or maybe she didn't know about Moderna. I don't know. But the thing is that if you take a look at many of the analysis, price action, yeah, great. If you take a look at many of the stocks that have been shared in the community, haven't you seen, can you tell me if you've seen levels like this play out? I mean, very, very strongly. I mean, many of them, so hundreds. It's not a dozen of levels like this, hundreds of them. Okay, so that proves what I'm trying to say. So after such a strong rally, don't you think that Moderna will retrace soon? But we don't know what soon means. Soon could be 1 year, 1.5 years. Soon could be 6 months. I don't know. But what I can tell you is that I am not going to buy Moderna here. Okay? If you read in the news, okay, Moderna has just released a new drug that will prevent you from whatever. Okay? Don't buy. Okay? Just wait, at least over there. Over there. And then the next stop, this is the first stop. Second stop, okay? Third stop. So there are 3 trading opportunities on Moderna. This one is aggressive, this one is not as aggressive, and this one is conservative and very high probability. So which one are you going to take? I am going to wait at least for this one. Okay? Here you can set an alert on that weekly area demand and wait for new levels, or you can say, okay, I'm going to trade this one, but I do not expect price to break all-time highs. So it will depend how price approaches and what price action we have right overhead. Makes sense what I'm trying to say? Supply and demand is made of price action, and price action makes supply and demand. So both go hand in hand. You need to watch price action very, very closely. Okay? Moreover, in scenarios like this where price is overextended, this is overextension. Okay? So we have to wait. Maybe then the first quarter of 2021, okay, we're going to have like a candle like that consolidation away, and that's going to confirm this 3 months impulse as demand, and within it we've got a monthly area of demand nested. Make sense? So that's great. That's even better. Okay? So this is Moderna. You mean if the arrival is like step ladder down, then you will ignore weekly demand zone? No, I mean, if it is step ladder, it's great, because if it goes slowly like this is great. The problem is when you get here, imagine that next week you get this candle. Let me show you, Amit. Let me show you. Next week we get this candle. Red. Engulfing pattern. What would you do here? Would you buy? What would you do? Anyone? Would you buy at the weekly every month? That would mean that we would have like a red candle on the monthly like this. Around 120, same thing over here. I wouldn't buy there, my friend. No way. I wouldn't buy. So price action is very, very important as well. Okay? So we need to wait patiently. So you set the alert and wait to see if the arrival into the level is the one that you were expecting, or what usually happens when price is breaking all-time highs and all that. If it is unusual, forget about it. There are many other fishes in the sea, in the ocean. So wait, go and catch another fish, not this one. And in the biotech industry, it's even more tricky, because Then maybe they are about to release a new drug or a new vaccine and all that, and the FDA says no, this is not working. Blah, boom, and it tanks. So it's difficult. Okay. So wait until it reaches the demand. Yeah, until it reaches wait until price reaches that area of demand. You set the alert, and if the price action is correct, then you can say, okay, it's good to go long. Amit, how should it arrive to the weekly? Slowly, okay, slowly. Maybe one candle here, another one and there. I mean, 5-6 candles on the way down, without anything bad on the monthly or the 3 months. Slowly, okay, a slowly arrival. If it is down here, it doesn't really matter if the arrival is fast. If it is down there, it's even less, okay. Obviously, if you get a candle tomorrow, I mean, if this is today is the end of the year, and the January candle opens there, and then in 1 week price does like this, that's not a good idea to go long. Make sense? It means that there is a lot of interest in selling this stock. Okay, so good. So, like I said, 3 areas, one over there, and one over there. This is more aggressive, more conservative, and very conservative. So it will depend on price action, okay? But given this strength of this, okay, I would be inclined that price is going to reach that area. And this price action on the monthly doesn't look good at all. Look, guys, writing something, if you are using the monthly, weekly, daily, do you have to place your stop loss and take profit on the daily? No, not at all. First of all, you need to establish what is your take profit. When, how much do you want from a trade, for a particular trade? In my case, 3 times the risk. That's what I'm doing. Sometimes even less. Okay? So if you are placing the trade here, imagine on the daily, and then you see that price action here on the way down is compressed really bad. The weekly and daily areas of supply on the way down have been tested. So there's a lot of profit for margin. So these areas of supply on the way down that were tested, so just imagine them, okay, because they are not there. They are very weak, and price will probably continue to rally and eliminate them. But if you get a very strong area of supply over there that provided a pullback to the entry, so that's obviously the target. Let's exit over there. But if there is nothing there, or there are tested imbalances, then it's good to maybe trade your stop loss, close part of the trade, and let part of the trade continue in case price removes the tested imbalances. But if there are fresh imbalances, those should be your areas where you should be thinking of closing, okay, your trade. Okay, good. A stop loss in the middle time frame? Yes, I mean, it will depend. I mean, Luca, it will depend on what you are looking at. I mean, if you are on Aussie dollar and you know that the 12 months area of demand is in control, 6 months area of demand is in control, and you go long, let's say that there is an area of demand on the daily over here, you could say, okay, I'm going to exit at the proximal line of that monthly area supply. But then you realize that this is in control, so probably that's going to be eliminated. So the wisest thing to do is when prices are around that area, close part of the trade, trail your stop loss, and let it run. So even though you enter on a daily area demand probably over there, okay, imagine that doesn't mean that you have to exit at the opposing daily area supply or the weekly area supply here. Okay, you could, based on the bigger time frames, you could say now there is more room than initially was expected, so I can hold the trade for longer. Okay. Could you define scenario which you suggest are aggressive trades? Anything against the trend? Amit, my understanding is going against higher time frame trends, and when the lower time frame is out of alignment, opposite direction, engulfing patterns, or high time frame, etc. Yeah, I mean, anything aggressive trades when you have an engulfing pattern against you, forget about. Counter trend, obviously, and aggressive trading, high probability trades. Well, that the opposing area has been tested several times and used up, and there is a bigger time frame area of imbalance in control. Those are great for aggressive trading, high probability aggressive trading. If the level in control hasn't been tested before, forget about being aggressive. That's probably not going to hold. If it is tested higher time frame ranges, like Brian is saying right now, then yes, you can go against it, okay? But I'm not going to go, imagine that this area of demand on the 6 months have been tested 2-3 times, and there is a great level of demand or supply over here. I'm not going to go short against us on a 4-hour area of supply with 6 months area of demand in control, even if it has been tested several times, okay? One thing that you have to understand is that the strongest and high probability imbalances are super clear and obvious. Haven't you seen that? Haven't you realized about that? The strongest, I mean, they are super obvious. I mean, just look at the chart and then they're going to stand out. They're going to like, hey, look at me, my friend. I'm here. Okay. But if you are not aware of the bigger time frames, then you're going to be selling short against demand or buying against supply. But it's a good, even though you are trading, you might be trading the monthly sequence, it is a good idea to take a look at the bigger time frames. Why? Because that could throw some light. So why, if you were trading, let me say here, let me see over here, I'm going to use the replay functionality on TradingView and go back here. So this is the scenario. Monthly downtrend, everything. You say, okay, now monthly downtrend after such a strong rally, we have to wait, and this is the analysis I made a few months ago. Short only possible over there. Okay? So, pink candle. I was saying pink candle and all that, and then I looked at the 6 months, 12 months, and I shared with you, oops, not a good idea. This is also tested on departure. Not a good idea to go short. We might have the monthly area supply eliminated because of that. If you are looking only at the monthly time frame as the biggest time frame in your sequence, then you might have many losses. And if you look at the stock market, okay, you would have hundreds of losses, hundreds of them, for not looking at the bigger picture. Because there have been many supply zones like this on the monthly. Those trading stocks will know, and even if you don't know, if you have been reading my analysis, you will know how many strong supply zones on the monthly have been eliminated in the last 6 months since the COVID-19 was going to shatter and annihilate the human being from the world and the financial market. How many supply zones have been eliminated like this? Anyone? Obviously, you don't know the number. But since the COVID-19, there have been, I mean, I haven't counted them, but I can tell you hundreds of them because I'm doing the analysis of 100 stocks. So why has these levels been eliminated? Because there were 12 months, 6 months, okay, and 3 months average demand in control. If you take a look at, for example, ExxonMobil, okay, why is price rising? Why do you think this area of supply is going to be eliminated? I'm telling you now, right now, this is going to be eliminated. Will it hold for a few weeks or months like this? I don't know, but this is going to be eliminated. Okay? When you take a look at the 12 months, oh my God, look at that. Why is price reacting? Because there's strong, very strong area of demand over there. All this was COVID. There were no place in the world to hold so much crude oil. So the crude oil went like minus $40. Impossible. I mean, like the future traders were being paid to buy contracts of crude oil. That's crazy. Never happened in the history. So it was like silly. So while all that was happening, many oil-related stocks hit 12 months areas of demand. Chevron, ExxonMobil, and many others. BP. Let's take a look at BP, British Petroleum. Okay? What do we have here, my friend? Okay? 12 months area of demand, even stronger than the one from ExxonMobil. So, is this fact valid only for stocks? No, for everything. Everything. Well, I showed you here. Aussie dollar. That's not a stock. Okay? Bitcoin. I showed you already on Bitcoin. If you go to Bitcoin, 12 months, 3 months, and all that. Okay, it didn't reach the 3 months area of demand over here because the monthly was the obstacle in the middle. Okay? But it's the same thing. So you go to BP. Wow. Why is it reacting? Well, because it has reached that area of demand. I'm long on Exxon and Mobil and on BP as well. Expecting price to reach that area minimum. Makes sense what I'm trying to say. Any questions about this? So, COVID-19, the whole world, I mean the pandemic that was going to annihilate half of the world, except Mr. Trump, okay? That he loves shots of bleach, okay? He was not going to die. He loves those shots. And the thing is, the whole world was going to be annihilated. A new human being was going to be born from the ashes. I don't know, okay? And what happened? What happened? Well, if you take a look at, I don't know, all the like Boeing, Airbus, also American Airlines, United Airlines, Delta Airlines, Azul Airlines, Lufthansa, all those airlines, there was not a single client taking a flight because the sky was locked down the same way as the cities and the countries and the whole world was locked down. Okay, what happened? Let me take a look. Let's go to Lufthansa. Okay, Lufthansa. Okay, 12 months area of demand is in control, trying to rally. Let's go to TUI, the biggest tour operator in the world. Okay, 12 months, 6 months area of demand in control, rallying, new area of demand on the weekly. All this is COVID. Okay, where does COVID stop? Well, there is a bigger virus than the virus itself, and it's the human being, the greedy human being that has money, and he doesn't really care about what happens to the human being. He just wants money. He's a professional making money. So that's us. The virus is not our enemy. The human being is the biggest virus the planet Earth has ever had. I mean, we are the virus. Okay? But that's a topic for, I don't know, dinner with good wine and all that. You know what I mean? Bill Gates, yeah. Okay, so we are TUI. Let's take a look. United Airlines. Oh my God, this is COVID-19. Okay, COVID-19. All this. Where did it stop? 12 months area of demand. I am long on United Airlines. Room to reach that area of supply. I don't know. And a cruise line like a Norwegian cruise line. No, Norwegian cruise line. This one is not the one I wanted to. It was another one. What was it? Carnival. Sorry, Octavio. Carnival. Yeah, thank you. CCL. Well, here it is, over there, and there is room for price to retrace all the way up. This one there was overshot. Okay, that is one of the exceptions. Overshot, and then rallied. Price is going to rally all the way up here, almost 100%. So longs are near its demand. So it doesn't really matter. I mean, this is COVID, so the whole world was very afraid. And you had shares of Carnival, United Airlines, Delta Airlines. Okay, this one almost reached the 12 months area of demand, which is a pity. Okay. Almost 6 months area demand over there. So the whole world was like afraid. So what do you do when you are afraid? You get rid of your possessions. You try to sell them. Okay? So what do? You sell shares, panic, like David said. You share shares, and then who do you think is going to buy? Well, those that know that what's going to happen. So now, Delta Airlines, United Airlines, okay, it is very cheap. I mean, like half a year ago, it was costing like $100 per share. And half a year later, 1 year later, less, it's costing 4 times less. Okay, what do? It's a bargain. You buy. Instead of buying 1, you buy 100. Okay, makes sense. So now, like Octavio said, all prices are at 2008 values. So it is very cheap. And what do when something is very cheap? You buy lots and lots of items, of goods, because it's very cheap. As simple as that. Okay? And that's supply and demand core rules, or other core rules. I mean, and you shouldn't go against that. But you will not. I mean, if you take a look, the biggest time frame that most traders use is this one. In my research for options, I've seen that most people don't even use the charts. They are using a mathematical approach, using all kind of spreads, bullish and bearish spreads and all that kind of crap. It works, obviously, it works. But it is a very risky approach because the reward risk formula is upside down. You risk a lot to win a little bit. I mean, that's something to be discussed in a few months when the option channel is there, okay? But the thing is that it's upside down, it's reversed. So when you take a look, if this is the biggest time frame that you look at, what are you going to see there on United Airlines? Chaos. Chaos. You're going to be reading about that, there are no clients, United Airlines flights are empty because of fear of the COVID, or they are not flying at all because the government doesn't allow any flights, okay? The skies are closed. And that's what you're going to hear. And then when you look at that, then you're going to be trying maybe to scalp on the way up, on the way down, and all that, okay? But if you take a look at the daily, I mean, gaps are everywhere because of the nature of the stock market. It's only open an hours a day. So the pre-market and the post-market, they are going to create a lot of liquidity, and you're going to have these gaps depending on what happened the day before and all that. But as you go higher, let me read Amit, I find it difficult to analyze daily charts of stocks due to gaps. Yeah, I was just referring to that. Weekly and higher. So time frame easier to analyze. So what happens when you start going up in time frames? So when you go to the weekly, all those gaps are merged. Okay? You go to a bigger time frame on the monthly, and there is not a single gap. All this is plenty of gaps, okay, on the smaller time frames. But as you sort of glue together, you merge all that lower time frame price action, you start seeing the light. And the light is telling us that all that mess on the daily was the accumulation process that was being created as a reaction to a very strong area on the 12 months. And this is what is going to happen. I could bet with you $100,000. Okay, I don't have it. I don't have them, sorry. But I'm going to bet it because I don't have it. That price is going to rally all the way up to the origin of the move. I mean, this is what always happens. Always. But if you are not looking at a bigger time frame, you are going to see a mess. You shouldn't be trading a mess. Okay, makes sense? So, any other question about this? So if you are patient enough and you locate strong imbalances like this, that's great. I mean, if you are a long-term investor, just look at the 3 months, 6 months, even month as well, average demand. nested at these areas, and then buy and hold for long term. Okay, buy and hold. That's the approach of an investor. If you're a trader speculating every week, every month to get a paycheck and all that, then obviously you can go long there. By holding the trade for a year, that might not be your approach, because you're going to have all that money locked in this on a single trade, while there will be many other trades that you could be profiting from, but you can't because you don't have the equity to buy more, since you have on United Airlines and on Delta Airlines, on Exxon and all those. So it's a different approach. Okay. So any other questions about this analysis and these charts? We could be millionaires in a couple of years. Yes, if you had enough money to buy hundreds of thousands of shares or option contracts. I don't have that money, but I wish I had. My ultimate intention in a few years, probably, if I can sort out how I can do that from Spain or from anywhere else, I would like to create a fund. And from there, trade, have access to much more money, and from there, trade these imbalances. But right now, I just can't. But I would love that. Yeah, buy LIPS options for years, but then you have to have the money there locked in for a long time. And if price starts doing nothing like here, it's been like 3, 6, 7 months doing nothing. So imagine that you decide to buy a LIP option, and that costs you, I don't know how much it is right now, but imagine it is like, I don't know, $500. Let's say, I don't know, and you buy 10. So you spend $5,000. So you would have $5,000 over there doing nothing for 7 months, okay, which is another approach, okay? And then now it's starting to rally. Maybe you are doubling your profits, okay? Your initial risk is 5,000. Maybe you have like 10,000. But in the meantime, there have been other great trades happening on other stocks, and you couldn't invest on those because you had 5,000 over here. So it's a different approach, a different one, okay? Anwar, I have a question which may not be much relevant, but to differentiate between stock and CFD. Yeah, well, CFD, contract for difference, it's like a highly leveraged type of contract. You are paying the broker for lending you liquidity and leverage. So when you buy a stock, usually the brokers will have a 2-to-1 leverage. So that means if you have $10,000 in your capital, you will be able to buy, you will have the buying power of $20,000. Okay, that's a leverage of 2-to-1. With CFD, you're going to have probably 10-to-1, and sometimes even 20-to-1. But to compensate that, you're going to have to pay the broker on a daily basis a percentage. So if price doesn't rally very strongly and in a short time, then the benefits will be consumed by the daily interest you're going to have to pay to the broker. So I wouldn't recommend you to buy CFD unless you want to exit the trade soon. Otherwise, the interest will kill you. Make sense, Anwar? Okay, MetaTrader, broker, you will see stocks and all that. All those stocks are CFDs. You are not owning the shares. You just, the contract for difference. The leverage asset that the broker is providing you to trade and earn a lot of money with you, paying them a huge interest on a daily basis. Okay, so United Airlines, we saw lots of examples that we don't really care about COVID, even though the whole world does. But as an investor, COVID-19 was the tool or the trigger that allowed us to find great opportunities. The market did not come to an end. Okay, it came to the end of the bearish move. And where did it end? At strong areas of demand, where the assets were so cheap that the only thing you could do was to buy. Make sense? Okay, let me go before over Euro Pound that Dabi mentioned before, and now he's mentioning it again, Diego. Let's do the chain analysis. Do you have any example? You want me to go through something in particular, Diego? So Euro Pound. With bad price action, well, you shouldn't, let me tell you something, Diego. Forget about it. You are overcomplicating things. If price action is bad, what should you do in a real life scenario? Anyone. If price action is bad, what do? Stay out. Stay away. Diego, do not try to understand every single candlestick and every single scenario, because you will be driven mad. When you see price action is not clear, it's a mess, compressed, stay out, stay away. Swipe the stock of the Forex pair left and forget about it. Don't try to understand what's going on. Otherwise, I used to do that, okay? Because I was trying to come up with rules for what I was creating and all that, but that's something I've learned. If price action is very bad, forget about it. There are many other fishes in the ocean. Go and get one that is catchable. Okay? Forget about it. So Euro, Amit, fully agree. Even good price action doesn't work always. So forget about doing the chain analysis with bad price action. It's going to drive you mad, because you're going to see peaks, and they are not peaks, they are valleys. They are CPs, or a CP looks like a peak or like a valley. It's like, because there is no liquidity. And since there is no liquidity, there is nothing to look at. You need impulses, you need momentum. Those impulses and momentum eliminate opposing imbalances, and then we are talking. Otherwise, forget about it. Okay, so weekly, what is the question about this one, Dabi? As explained in previous analysis, we were looking to go long at that weekly area of demand. When price was there, we were saying that the arrival is great because it took one candle to create that area, a single candlestick that is much wider than the average ERC on the chart, okay? And then we said, I said specifically, if you go long here at the daily area demand nested down there, which is like here, obviously you have to protect your entry with the stop loss 25% underneath the imbalance. Okay, still holding it, Dabi, from down there, from here. Okay, great. So those are the rules, because sometimes these levels are overshot, like on gold, but on gold is a different scenario, because on gold we have this bearish price action that is telling us that that's probably the reason why the imbalance here is not holding on the weekly. Didn't hold, okay? But in this case, on the pound, on the euro pound, we have different scenario, because we don't have those bearish impulses and all that on the bigger time frames. On the 6 months, it's okay, bullish engulfing pattern, and 6 months as well. So rules say that when you have an imbalance, you have to set your stop loss 1/4 or 25% underneath the distal line. So if we divide this by half and then this by half, the stop loss should have been around there, around 88.44. And the same is true for the daily. So if you are holding this trade like Davi, then you are great. You are doing fine. And then we've got new areas of demand on the daily, on the 4 hour. Although this is the daily of demand over here. Another one probably on the 4 hour. Yeah, another one over here. So the thing is that those are the rules. So if you want to say, okay, I'm gonna place my long over there and my stop loss will be there, then you get a loss. because you never know when the level is going to be overshot or not, or if it's going to hold or not. This is not the clearest scenario of this price action, but like I said in my analysis, if you want to go long, protect it and manage your stop loss aggressively, because this could continue to go down. It didn't, so which is great for Dabi. You are based on the 3 months. So 3 months we've got, yeah, great. Long bias, obviously. And these are the rules. The rules are there for a reason, okay? You could say I'm going to go long there instead and then stop loss over there. You can take the full level because it's a single candlestick at the base. And that's it. Manuel, okay, is asking how the swaps are going on this one, Dabi. So this is euro pound, long bias on this one. If you, this is a great level over there, but obviously this is going to take a long time. Look at this area of demand, 12 months area of demand. Same thing on Forex. The problem is that on Forex, the same thing happens. You see, 12 months area of demand playing out, took control. The thing is that on Forex, we have only a bunch of cross pairs. So waiting for these strong imbalances is going to take you a hell of a time. But on stocks, we have thousands of them. You don't have to wait that long, because while one does not reach the imbalance, others will do. And then you can use the monthly and the weekly and the 3 months, the 6 months and all that. But on Forex, that's going to be very difficult. So it's taking long, like on the Aussie dollar, it took ages to retrace to that area of demand. And that, once it's done, it's great. Anwar, are you suggesting that we should consider at a glance the strongest rallies? Is that a question for me, Anwar? Referring to what exactly? Because I was looking at the charts and I didn't know when you typed that. Okay? So, you want me to look at any particular asset? Luca, on the 12 and 6 months in the euro dollar, is the price not supposed to react to a strong confluence trend line? On which time frame, Luca? Trend line on which one? 6 months. So we have a trend line over there. Yeah, there it is. There's a trend line over there. But we are having new areas of demand being created. So the trend line confluence is going to be out of the way very, very soon. So right now, there's nothing to stop you from going long. Long is the way to go right now. Longs would have been great here. We called this trade a long time ago. Then there were daily wow longs over there. I remember that a few months ago. We were expecting price to drop to the monthly area of demand. It didn't. And this is similar to NASDAQ, to AMD, and PayPal, eBay, and many, many others. Long is the way to go. You don't care about this trend line confluence right now. Price action here is very poor. This is nothing. So there's room for price to reach that area. Confirmation needed for shorts on this one. So trend lines are there for confluence, but then you have to look also at the price action and see if you can go long against it or not. Okay? So that's the euro dollar. So the chain analysis. Somebody said before, but he was saying, Manuel, I think, to do on a very complex situation. So I'm not going to do that because that's going to create confusion. Instead of helping you, it's going to be a handicap. It's going to be a negative thing for you. Yes, make your pick. I mean, I don't care. I mean, I've got a few here to take a look at. Let's take a look at CRISPR. You know this company, what they do? Anyone knows about this company? This is very interesting. Diego, you don't know that one? You should. Because these guys are changing the world. And these guys over there are going to change the human being. We're going to be new human beings maybe in a couple of generations. We won't be there. But these guys are going to be the cause. Well, the girl, the woman behind it. Okay? CRISPR. For any of you, I mean, if you have Netflix, you should watch a documentary which is talking about this company and many others, which is, I don't remember the name of the documentary. Let me search it, okay? Because it's like, wow. I mean, this is one of the best documentaries I've seen in a long time. How was it called? CRISPR. Yeah. The name of the documentary is called Unnatural Selection. I mean, this is a must. You should watch this documentary. I'm not going to tell you what it is about, but you should watch it because it's just, I mean, mind-blowing. And the people behind it is the girl, the woman that invented a way to modify the human DNA from home. So now you can start to understand the implications of this, that anyone can create a new being, a new dog, a new cat, a new mosquito, a new human being from the comfort of your lobby, of your home. Very cheap to do it, very easy to do, quote unquote, okay? And this is what this company is doing. And it's going to change the human being for sure, that's for sure. So you should see watch the documentary called Unnatural Selection. It's mind-blowing. So this company has created a way to modify the DNA very, very easily, and that's helping all these biotech companies to create all kind of fancy vaccines like the one being created by Pfizer and all that, even though they are not genetically programmed, but they are using the RNA. But it is very, very, very interesting and, like Anwar said, very dangerous. But who cares about that? Do you think that the people of China or Russia is going to care about that, Anwar? Don't care about that. I believe, I'm pretty sure, that they have already created mutants. New beings, new human beings and dogs and sheep, whatever. It's not allowed by the UN. They don't care about that. I'm pretty sure. But well, other than that, we're going to discuss trading here. Not that, but it is interesting sometimes to know the story of the company. We all know about Facebook or Caterpillar. We know about Google. We know about Visa, MasterCard, eBay, PayPal, Netflix. But CRISPR, what the hell is this company about? All right. Another one is Editas Medicine, which they are doing the same thing in a different way. Using what CRISPR has created, they are doing something else. This is also covered in the documentary. So huge. All these biotech companies taking advantage of what Editas and CRISPR have created. So these companies are roaring. Okay. Science should be governed by moralities. Well, that's an utopia. And that's not going to happen. Money comes first, always. And that's not going to change. It was like that in the times of the Romans, Egyptians, and any time. You look back, same thing over and over. So that's not going to change at all. Even if we destroy the planet, which is what we are doing. We're not destroying the planet. We are killing the life in the planet. We are not killing the planet. The planet is going to survive millions and millions of years. But the life in it will reinvent itself. Well, CRISPR, new area of demand over there, because I start talking about this and I need a bottle of wine, and I don't have wine right now. So, new area of demand will be confirmed at the end of the month. So, longs over there, new area of demand over there in 3 months, so we have to wait. Now it's too expensive. If we take a look at Editas Medicine. Okay, we've got, I mean, this is a great opportunity. It might take 6 months. Great. Is waiting 6 months a problem for you? I mean, if you are like 90 years old, that might be a problem. Okay, and unfortunately, time flies. Time flies. And waiting for 6 months is not a problem, but if you are old, it is a problem. So the thing is that we are going to look at, we're going to have a lot of stocks in our watch list. So while we wait for this one, there will be others that already are pulling back to those imbalances. Okay? And that's the beauty of it. If you are trading like a bunch of stocks, 10, 25, 30, your favorite ones, the most liquid ones, the most volatile and all that, then you're going to have a problem because you're going to have to look at the smaller time frames if you are going to wait for this to happen, for the pullbacks. But if you have a big watch list, like I do, it doesn't really matter because you're going to have strong levels being created. And in the meantime, there will be others that were already created and price will be on their way down or on the way up to retest those imbalances. So this one, I mean, an alert over there, wait for the consolidation away. And if the longer it takes to retrace, what I'm going to say, the better or the worst? What do you think? The better. The longer it takes, the better. Because it's bad arrival, like Diego said. So if we get the consolidation away, then we get a month here, another month, and a rally, then another month. It's like 1 month, 6, 7, 8, 9 months. It doesn't matter. I want to go long there. So, well, maybe if you're still a member of the community in a year, we will be talking about this setup in a year. Okay? I'm developing some tools that will provide you with lots of good things, like the one that I showed you today. I'm going to discuss it with you now. Quick look at it. Like this one. So I have already created a way to add my alerts on an Excel spreadsheet and all that. So like I said today here, this is going to help all of us. This is not like I said, this is not a signal service, like I say at the beginning of this post. But I'm adding the proximal line to the imbalances that we are expecting price to retrace and to react. And here we've got the distance in percentage, the distance that is left to reach the proximal line, 1%, 174. So this is, at least I'm going to be sharing every maybe 2-3 weeks. Okay. So this is the least that I'm sharing today. There are many more. Okay. But they are farther than 13, 15%. Okay. And I have gone only through the maybe 20% of my watch list. So there will be many. If I updated this list in a week, there will be many others here in the middle. But this is going, obviously, there are from Schectra, from in Germany, also from Paris, like this one, Compagnie de Saint-Gobain, from the Euronext. But mostly there will be American stocks. So this is going to help you focus on what matters. This is not a signal service. It will never be. But you need to, well, AbbVie, for example, Activision Blizzard, gaming company. We've got a level like around 80, 50. I'm not indicating here the time frame where it is. It will be minimum weekly and monthly. Because if I add the daily time frames, imbalances, I'm going to drive myself mad because I just can't. I'm not trading daily either way. But those changes very rapidly, and I've got a list of 600, 700 stocks, so I need to add bigger time frames. So if we take a look at AbbVie, it's going to break all-time highs. If we take a look, I don't know, to Coca-Cola, we have a new average demand at around 50. We go to Coca-Cola here. I'm long on this one from the weekly average demand. We go to Coca-Cola. Okay, I'm long from here. And there is another one over there. No retracement to this, the daily and weekly average demand. So this is telling you that there is one around 50. Okay, but I cannot specify the time frame because otherwise, I mean, I'm going to need to clone myself, okay? Like 10 times. And I'm not trading daily, so it's up to you to do some work. I'm providing you with those, and then the rest is up to you. No, it is, like I said, Anwar, this is weekly, monthly, it doesn't really matter. I've got many alerts where the percentage to be reached is like 200 or 300. Those are 3, 6 months areas of demand, but they are great for those. So if I take a look at CRISPR, it's not there because CRISPR is very far. I mean, CRISPR, if we could take a look at CRISPR, let me take a look at this, CRISPR. If I want to add this, it is like, how much? It's like 69, 70%. So it's not going to appear here yet, but maybe in 5 months, it will be here. So it's up to you to create a watch list with these stocks and watch them closely. Make sense? If you have any doubts, you ask in the community. I will share analysis and all. We'll discuss all that. No, it's something else. It's an API connected to IB and all that. It's something else. It's just a screenshot. It's online on Google. It's on Google Sheet. It's online, so I can't update it anywhere in the world. I don't want to use Excel because I would need the Excel application installed on my computer with Google Sheet. I just need a connection. I can even update these imbalances with my mobile. But well, what I just wanted to show you what I'm doing, okay? And presuming the distance bar is from the daily demand. What do you mean the distance bar? Distance, this one? What do you mean, Monica? Distance bar. Ah, no, okay, no. Yeah, okay, sorry. Distance bar is like a more visual approach to the percentage. From here to here is 100%. So if it is very, very little, okay, very small, it means that it is very close to reaching the imbalance. Make sense, Monica? It's the same thing. It's the same value. But this is represented with a percentage, and this is represented with a bar, like a progress bar, loading bar, okay? You don't get this percentage input checking chart by chart. No, you have to do it. This is done automatically, Davi. Once I enter this price over here, I get the formula subtracting this price from this price, and I get the percentage. So when price ticks and moves a little bit and it changes, then this distance changes automatically. Otherwise, I wouldn't be here. Okay, makes sense? So this is going to help you a lot. I mean, I'm not going to do this with Forex because Forex there are like 20, 30 cross pairs and all that. And I know them by heart. I mean, I know them by heart, where they are. So, but in stocks, it's just impossible. Okay? A mid on a euro 4-hour counter trend, while it's possible, looks invalid due to bad price action. Well, I mean, you asked Amit and you answered yourself. So you don't need my opinion. You said already that it's bad price action. Yes. I mean, and I said before that the euro is bullish and the dollar index is bearish. So going against the trend is silly. Okay. So there it is. So CRISPR, we already took a look at that one. Also Editas. I'm going to add it to the list. Euro dollar, BP, Moderna, Pfizer, Tesla, AbbVie, Electronic Arts. Okay? It is a pity that Electronic Arts did not retrace to this strong imbalance. Price action in the weekly is a little bit of a mess. This area of supply has been eliminated. Another example, 3 months area of supply with 6 months demand in control. So in a 6 months uptrend, demand is created and respected supply is eliminated. So if supply on the 6 months is supposed to be eliminated, this is not supply. Anyway, what do you think is going to happen to 3 months, monthly and weekly, if the 6 month supply is going to be eliminated in an uptrend? So this is supposed to be eliminated as well. So that's the power of the bigger time frame areas of imbalance and the sequences. So the thing is that a new area of demand is being created on the weekly, new areas on the daily, no retracement. So price will probably continue to rally much higher given the strength of this bullish impulse. And this is very bad price action. So it's going to do like that, create a new area of demand. And that's what probably is going to happen almost for sure. And let me take a look at also at Electronic Arts. This is a gaming company. Another one. And Juan Sebastian, what other broker apart from Interactive Brokers would you suggest for stocks? I can't tell you really. Interactive Brokers is the one that I learned about. It is one of the biggest brokers in the world. And it is available in all the countries, really. Very cheap commissions. But other than that, I just wouldn't be able to tell you. There's IG as well. There are, if you want to buy shares of stocks, it's DEGIRO in Europe. It depends on where you are living. And maybe the broker will be available in my location, but it won't be in your location. I just can't recommend you anything. I wouldn't even recommend you Interactive Brokers if you were going to do analysis, because the platform is crap. But for execution purposes, I'm just using that. TD Ameritrade is good as well. Thinkorswim, like Amit Singh said. IB offers CFD stocks as well. But I'm not doing that. Okay. But I have had no problem at all with IB. So far, so good. And I read an article a few months ago that said that 65 or something % of all trading in the world goes through Interactive Brokers. Sometimes not directly through them, but through all the exchanges that they use or whatever they call them. So Robinhood is another one, like Josh said. But I'm happy with Thinkorswim, and I'm using Thinkorswim for analysis, for scanning and all that, and executing my trades with Interactive Brokers. As you will see here, I've got, this is Thinkorswim and this is Interactive Brokers. And those are the two brokers that I'm using. Okay, so that's Electronic Arts. So longs on the way up. Well, what about Tesla? Well, this one is unreachable. It's like new strong area over there, new one being created over there. Look at the strength of Tesla. It's just crazy. This guy is going to collapse. I don't know when it's going to collapse. So buying, the more it rallies, the lower the probability and the more aggressive this type of trading is. So if you want to buy and hold here is not a good idea. It's not possible. Okay? Buy and hold here, there, or after a very strong bearish correction. But do not expect this level for price to drop there and then rally like that. I continue to rally to $1,000 per share. Okay? So the higher it goes, the lower the probability. So this is Tesla. And now let me take a look at Nikola. Oops, this one is about to. Again, so one's good. So, Alfonso, I noticed that TOS charts sometimes are very different from others. Yeah, sometimes I've seen that as well. But I'm using TOS for scanning, and I've coded a couple of things over there to help me in my analysis. So I don't care about, I'm not using TOS for placing my trades. So this one, we had a nice trade. I had a nice trade. I closed it luckily over there for a nice profit. And now we have demand here in control with 3 months and all that. And if these highs are broken on Nikola, it's this name of this company is really funny because we have Tesla, okay? And then we have Nikola. I guess you know who Nikola Tesla was. Without him, we wouldn't be here right now, probably, doing this analysis. So we have Tesla. Everybody knows Tesla, but they don't know why Tesla stock is called Tesla. Many people won't know that. And also they won't know the name of the guy called Tesla, was Nikola. So it was funny the other day. I don't know how I came with this talk. I don't know how I found out about this one. I can tell you. But it's funny because now we have Nikola and we have Tesla. We have the name and the first name and the last name, Nikola Tesla. Battery operated cars and trucks. Exactly, Monica. So AD current. Without it, I mean, we would have our cities covered with lots of cables everywhere, like it was not the alternate, the continuous current was invented, okay? But Tesla solved that problem and created the AD current, the alternate current. I think that's the way it's called in English. In Spanish, it's called electricidad alterna. And so if these highs on the daily are broken, wow. There's a lot of room for price to keep on rallying. So right now it could be, this is a buy and hold type of trade, okay? I bought like around there and I exited there for, I think it was like $3,300, which is great. I posted it in the community and then I'm looking to go long again on this one. Which Chinese stock are you referring to, Jar? I think I have that one, but I don't remember its name. What's the name of that Chinese stock that builds electric cars? Okay, so we have Tesla, we have Nikola. So Tesla is unreachable, but Nikola is reachable and affordable. NIO, yes, I've got it. I've got that one. NIO should be here. Yeah, I've got that one. Not too much price action over here. New one, yeah. Good. So same thing. We've got NIO. I've got my alerts set over there. On NIO, should be, yeah. Let me load this one. I've got my, should be here. I've learned about this one, NIO. Okay, there it is. A few weeks ago, I believe. So I've got my alert over there. This one I'm not interested. This is very similar to, which one was it? We were discussing the same price action before. It was on which one? Pfizer and Moderna, I believe. Yeah, very similar to Moderna. Very similar. So alert set over there. This one is a little bit more aggressive, and this one is going to be great for long term if NIO drops down there. Davi, yes, I have to check for the open interest as well. Yeah, without it, I'm not trading. So plenty on NIO. That's great. I don't usually have stocks that do not have enough open interest. So there are some exceptions because I want to keep track of them, but usually I won't. So same thing here as before with Moderna. This is a very high probability conservative type of trade, buy and hold type of trade. At $5 per share, very cheap. You don't even need to know about options. You just buy shares and hold. Okay, this is a more aggressive type of trade because it is located right where? Around there. This is not a buy and hold type of trade. And this one is located like at the interchange zone. That's medium probability. It's high probability as well, but it will depend on how price arrives, but it is good to go along. This one as well, but do not expect for price to hold this one and rally above the all-time highs. It could happen. That's not what usually happens. So more high probability type of trade, very high probability type of trade, medium probability, not a buy and hold. And that's it. That's what we have here, there, same thing, and at the bottom. So we have three possibilities. Which one do you want to take? So you set alerts and see price action. That's it. That one is like a no-brainer. Longs, no matter what. Okay, no matter what. Longs. Then this one, it could depend on price action. This one looks good right now. So this is as simple as it can get. I mean, you just don't have to work too hard to come up with these zones. The thing is, when you start looking at consolidation and all that, compressed price action, that's when things get very, very complicated. And that's when you are going to lose your money. As simple as that. So, Manuel, what kind of screener do you use? Finviz? No, I don't have any screener. I used to use Finviz to come up with some stocks and all that, but I already have my stocks. So I'm no longer using any screener. Okay? I use screener on TOS, Thinkorswim, to filter the ones that I have. And I check a few things for options and all that, and try to filter out the ones that I don't want with those filters. But that's it. I mean, I'm not using any more Finviz and all that. But there is a video in the community that explains how to search for stocks using Finviz. So if you want to watch it, it's in the Trading Platforms channel, I believe. But I already have this is my watch list with all the stocks. Okay, those are all the stocks that I am watching. Okay, so I don't need any screener. I just need to focus on the ones that I have. So if I use a screener, is to filter out the ones that I want from this huge list. And that's where this comes handy. You see? Why am I going to look at all the stocks every day or every week when I have this? Shouldn't I focus on this first? Make sense? Okay. So now NIO is already covered, which is also like Tesla and same sector. Where is it? Liquid. Where is it? Come on. Webinars. No. Webinars. There it is. So NIO, very similar to Tesla and Nikola. Maybe there will be others. But Nikola is in buy mode right now. Tesla is not. NIO is not. So out of the three, the only one that you could think of buying right now could be Nikola. It is cheap. It's only $18 per share if you want to buy the share. Okay, maybe you can buy 100. It's like $1,800. Or you can buy like 10 shares and it would be like $185 for those 10 shares. Then gets down up there, maybe you can get like 3 times the risk, 2 times the risk, 2R. So, any other question about this? Any other asset? Maybe 5 more minutes. Stock, forex, commodity, anything? Nope. I've got all my list already covered, I believe. GLDs, that's gold. So we already saw spot gold and micro gold, David. So it's the same thing. So if you were not there, just watch the webinar recording. Okay, same thing. GLD. Okay, weekly demand eliminated and all that. So it's being explained. We went through micro gold futures and also spot gold. Okay, so this one is the same thing. So you will watch it in the webinar, in the recording that I will be sharing with you later. Which asset? Anyone? You want me to do chain analysis for any asset? So tell me an asset. I usually, once, twice in a month should be doing it. But my mother has been really, really ill, and I just couldn't do it for almost a month and a half. So sorry for that. I just couldn't. So chain analysis. Okay, so let me go to here. Thanks, Monica. Now she's 100%. A week ago, she was like 70%, and now it's like, oh, wow. She's recovered completely, which is great. Let me take a look at this. Jara, you couldn't buy a long-term Nikola option right now? Yes, it would be great to buy. So we need new levels of demand, or at least we want these highs broken, or if we get these highs on the weekly, even better. But right now, there is room for price to keep on rallying until at least this week, even higher. So long-term longs are possible right now. But it could take, maybe now Nikola could spend here months doing nothing. So it's a danger. Sorry. Okay, let's do chain analysis on an old stock. JP Morgan, okay? JP Morgan. Monica said something else, but let's start with JP Morgan. JPM. So older objects. So which time frame do you want? Diego? Weekly, for example? Monthly? Okay, monthly. So monthly. So where do we start on the chain analysis? Where do we start? There? Where, Diego? Anyone? Exactly, from the right end. Oh, we are there. So do we have the possibility of drawing a bullish trend line here? Nope. Do we have any, can we spot any, from the recent, any area of demand or supply? Well, if this is all-time highs, which it is, then this should be monthly area of demand. Okay? If that is monthly area of demand, then this at the top should be supply, because this one was eliminated. That's it. So what do we have here at the bottom? Well, we have nothing. We continue to go left. We've got a peak here, another peak here, but we cannot draw a trend line that is horizontal. Makes no sense. It gives us no information at all. Okay, so we just cannot say, okay, this is a lower low than this low, I'm going to draw this trend line. Why? That gives you no information about it. Okay, so what we have right now, this is the area of supply, but where is demand? Well, demand there was eliminated. Why was it demand? All-time highs, rally, 2-3 ESC candles, consolidation away. So this is demand, and that demand was tested. We expected bigger penetration, and it was eliminated. So this is demand. We go lower, nothing. This is all-time highs. Again, we've got our area of demand right there. So demand is supply and demand. That's the chain analysis, and this is the range. This is the top of the range, and this is the bottom of the range. It fell short, retracing to that area, and then rallying. There's room to reach that area, so the only thing we can think of right now is going long. Makes sense? That's the chain analysis for the monthly time frame on JP Morgan. Long bias. Short up there? No. We need new strong supply zones. Why should I draw a trend line right now? Diego, you're telling me you don't consider any trend line? Why should I draw a trend line here? If I draw a trend line between this peak valley and this valley over there, I get the supply zone, isn't it? But didn't I get the same supply zone by considering this area of demand? So I don't need to draw a trend line. Why? I don't need it. Trend lines are needed when they are needed. Sometimes they are not. Sometimes they cannot even be drawn. Okay? So you start from here, and if you don't locate any imbalance because there is no opposing area, it's not clear, then you start looking at the trend lines. And the break of the trend line will create an imbalance. But right now, on the monthly, there is no need to draw a trend line. Okay. Sell supply, but this is a downtrend now on the monthly. But the thing is that this price action on the monthly is pretty bad. The departure is great. The basing structure is not. This bearish pink candle should mean that probably there was a weekly area of supply of something like that right at the top, and there is like bad price action in the smaller time frame on the weekly. I'm not sure, but there should be maybe a weekly area supply over there. But I don't know. Yeah, you see? Bad price action over there. Very strong, but I can tell you that hundreds of these zones have been eliminated already. Similar zones. So confirmation. I mean, I'm not going to trade with this bullish pink candle and all that against falling short to that 12 months area of demand. I'm not going to trade short. Even less, like I said at the beginning of the webinar, if the S&P, Dow Jones, Russell 2000, and Dow Jones, S&P 500, Nasdaq, all those American indexes tell us about the overall picture and bias in the American stock market. If all of them are bullish, breaking all-time highs, why are you going to take a short there? Can anybody tell me a single reason to take a short there with everything bullish and having seen so many of these imbalances eliminated? Nope. And that's, like Brian said, it's a COVID supply. I hadn't thought of that. Let's call this COVID supply. All COVID supply in the indexes and hundreds of stocks have already been eliminated. So why is this one going to be respected? S&P, Nasdaq, Russell, Dow Jones, breaking all-time highs, long bias. Shorts there, no way. Go long. Here, you've got here. There, rally. That's what we should be looking at. I don't think price is going to drop. I believe price is going to continue rallying without looking back. So that's the chain analysis for this one, for JP Morgan. Okay? So let's do another chain analysis. Somebody mentioned something else over there, something Reliance Industries, which is an Indian stock, or NSE. Which time frame? Amit? Well, let's do one time frame. Choose one. Otherwise, we're never gonna finish here. So, tell me one time frame. Monica said blue. Okay. So she didn't say pink. That's a very bad old joke. So, okay, good. This one. Let's take a look. Which time frame? Monthly, weekly? Which one do you want, Amit? And then we'll do blue. Monthly. Okay, let's do monthly. So we've got monthly here. This is all-time highs. All-time highs. So we've got a valley. We start from there. Okay, well, it doesn't really matter, Monica. Well, we'll do the monthly also on the other one. So we'll start from there. So here, no consolidation away after a very strong rally. Anything nested inside that price action in smaller time frames, smaller than the monthly, negated. Those are the rules. Okay? Then this is the imbalance responsible, or the impulse, the basing structure. Then we've got two ERCs, consolidation away with all these candles. So the demand level is located right there. That's the demand level. Okay. Then we've got a valley here, another valley there. There was a trend line over there, never broken. So this is this supply. Then anyone? Amit says yes, and Anwar says no. So which of the two is right? Well, exactly. Demand was broken, all-time highs. So if that is all-time highs, then this is demand. Okay? And if this is demand, then this is supply. We don't need a trend line. The trend line was there, but it was being respected. But this area of supply was the one responsible for eliminating that one over there. Another area of demand over there. So that's the chain analysis for the monthly on Reliance. On the weekly, it's going to get more interesting because we already have the bearish of the pattern, and price is probably going to do that. Okay? So all-time highs are, the all-time high scenario is very important. If we take a look at the weekly, this is another thing, a different thing. We've got here tricky price action, but this is all-time highs. Do we need a trend line? We don't need. We start from there, okay? But do we need a trend line? We don't really need a trend line. We don't even care if this is a valley, a CP, it's unclear price action. Why? Because this is all-time high. If this is all-time high, this is the basic structure, and it consolidated away. If that consolidated away, this is demand, isn't it? If this is demand, then this is supply. So we end up with supply, having eliminated weak area of demand. Do we need a trend line? We don't need it in this case. Make sense? Diego, the chain analysis is not easier on stocks than on Forex. It's the same thing. The problem is that on stocks, you're going to have all-time highs, all-time lows with nothing on the left. And the chain analysis is going to be very simple. Not because stocks are easier than Forex. It's because Forex, no matter what, I mean, almost all the Forex cross pairs are consolidating in the bigger time frames. But on stocks, you have all-time highs. So it's very easy to do this chain analysis on an asset, regardless of Forex or stocks or commodities or anything, or futures. If it is in an all-time high or all-time lows, it's very easy to do it. The problem happens when we get the consolidation. And that's where the realignment rules come in to help. Because if we get the weekly out of alignment, what do we do to do next? What do we need to do next? What do the realignment rules say about it? Look at the monthly. Exactly, Diego. So now that you know that the weekly is out of alignment, you look at the monthly. As simple as that. But you don't have the Forex consolidation with ranges for months and years. You don't have that. So it's not easier. It's just clearer right now because there is nothing on the left. And with nothing on the left, the chain analysis is peanuts. Makes sense? The problem comes when I want to trade this particular stock, and the stock is a real mess. If you try to do the chain analysis with bad price action, with low liquidity and all that, then rest assured that you are not going to do it well. And probably if you try to trade that scenario, you're going to lose money for sure. So why doing that? Focus on super strong areas of demand. So here we had 6 months area demand, 12 months over there. It didn't retrace to the 12 months because it reached the 6 months. Okay? So that's on Reliance. And then if you continue to go lower, this is another area of demand that is still holding, another one, all-time high. So which one of these can you trade? None of them. None of them. As simple as that. Why? Because the weekly is out of alignment. If the weekly is out of alignment, the mechanical approach that you have is weekly is out of alignment. Let's say like out of alignment, an X. And we need to look at one bigger time frame. Is the monthly still in an uptrend? Yes, it is. So this is the next stop. As simple as that. Though that's the beauty of the realignment scenario, the rules. Set and forget. That's it. So will price retrace here? I don't know. Will price go like this? I don't know. All I do know is that this is a high score level with a monthly, 3 months uptrend. The weekly is out of alignment, and that's the next spot where you should be thinking of going long. Nobody knows what is going to happen. We have our edge. We know how these huge imbalances, very big time frames, imbalances hold. You have seen many of them here. You can see hundreds, if not thousands of them in the community. So you just have to trust the rules. Okay? Trust them. Diego, have you ever compiled statistic about these long-term sequences and how they played out to see? No, I haven't. I did on Forex on a daily, weekly, a long time ago. It was very high, higher than 70%. But I was like, I don't know, 80 years ago when I was developing the rules. But with stocks, I'm just doing nothing. So they played out and they follow the same principles that I created originally for Forex. So I haven't had the time to do that. It's a very time-consuming task. And I have a lot of things on my plate right now. Lots of things. So I just can't do it. So, and this is Reliance. And then let's do blue and we'll finish. Okay? This one is dedicated to Monica. So, blue. This one is Blue Bear Biotechnology, isn't it? Biotechnology. So we've got 12 months, 6 months area after mining control. Only longs are possible. You want to know to do the chain analysis on, the monthly. So we start from there. Okay. So this is getting more complicated right now. Why? Because as you can see, this is not an all-time high scenario. We have a lot of price action here. So how can we make sense of it? Well, let's see. Is this bearish impulse an area of supply? Can anybody tell me? No. Lucas says no. Nobody else. So in order to be supply, it needs to eliminate on this impulse here. It must have eliminated something here on the left. And I don't see anything here that looks like demand. So what I do see here, if I zoom out a little bit, is that we can break our procedure, our approach. Okay, we're going to start from here, going left, blah, blah. But I can't see any monthly demand over there. So I need demand. Where is demand? Okay, so isn't this an all-time high scenario? You go to the more, the price action that stands out the most. All-time high, so this consolidated away, this should be demand. Okay, so this is demand. Has been tested several times and now it is in control. So the bottom of the range is right there, that monthly area of demand. So where is supply? Because here we cannot, this is not a peak, this is a peak, so we cannot do like this. Okay, so this is not demand. So we need supply. So if this is not supply, then supply must be higher. Okay, and where is supply? This is demand, isn't it? All-time high. So we need, this is supply. If this is supply, then this basic structure is demand, isn't it? There was no consolidation away there. So if this is demand, then isn't this supply? Make sense? And that's how you do the chain analysis. So now we end up with this supply zone. Okay, this cannot be demand. Why? Because there is no supply to be eliminated here. Okay, this is not supply. This is demand. Okay, I'm going to draw it. You can see all the pieces of the price action. This is demand, and this was supply, responsible for eliminating that area of demand. This is no consolidation away, so the origin was there. So this is demand. If this is demand, then this is supply. And that's how you do the chain analysis. Bearish trend line, you mean here, trend line like this? 2015? Okay, 2015 here. You mean which trend line are you referring to? You are not saying bullish or bearish from here, like that. Well, no, because this is not a peak. So you need two peaks. This is not a peak. So I cannot draw the trend line like connecting this one and this one because this is not a peak. and no peak, no free CP. So like Amit said, so I cannot draw the trend line. As simple as that. So nothing. So this is the chain analysis for the monthly time frame. So this is not a peak. This is a peak and this is a peak. So we connect these two with a trend line. Okay? That's the trend line on the monthly right now. Okay? It might break here a lower low. If that happens, then we would have to connect. We would have to use this as a peak, okay? And use the second one over there. Imagine that there is a lower low and all that, so we adjust the trend line like this. Ideally, if we get a new average demand over there, that is going to be super high volatility, but right now it is not happening, okay? This is more complex than the one we did for Reliance and the one we did for JP Morgan, because price action is a real mess, okay? Brian, look at the highest peak and you have overextension from there. No, here, yeah, exactly. And when you look at the 6 months, this is where you see it. See, you've got 6 months area of demand, 2 ERCs, very large ERCs, origin of the move 1 year later. See it, Brian, Monica, and everyone? Single candlestick at the base. So 1, 2 ERCs, very large, origin of the move. Now, what do we have? 1, 2 ERCs, the same thing after breaking at all-time highs, consolidating away. So now we have another 6 months area of demand in control, which is already in control. Okay? So that's how it works. So a 6 months chain is very simple. But on the smaller time frames on the monthly, it's getting much more complex because price action is a little bit of a mess. We need new areas of demand. Ideally, we want something strong up there. We've got a daily area demand there, weekly, sorry, that's a 4 hour. Sorry, daily. Nothing clear. So if these highs are eliminated, then rest assured the price is going to rally over there at least and even higher. And if these highs on the monthly are eliminated, then room to reach that area. Make sense? There's nothing to stop blue from becoming bluer if these monthly highs are eliminated. Because this is not supply. Supply is there, has been tested. And we've got 6 months and 12 months areas of demand control. So this is what we would expect. Ideally, we want these highs on the weekly, bearish of the pattern to be eliminated. Let's see how the weekly candle ends. We might be surprised, and then tomorrow we get something like that. So this is on my watch list, and we are waiting on this one. Okay, not as clear as the others, as Nikola. Nikola is a little bit more clear because the on blue we've got monthly demand has been tested several times, as you can see, whereas on Nikola we've got fresh demand zone, first time ever down there. Make sense? Alfonso, will you see new website and courses in early next year? Hopefully, yes. Yeah, it's I'm going to show you a little bit. So this is the new website. It's already live. I'm trying to learn how to create things and all that. I can do many things. There's an area for tutorials where I will be able to post tutorials. You will be able to post tutorials. I will have to verify those tutorials, obviously, to moderate them. Okay. But for example, I don't remember if Peter of which one of I don't know which the name of the user that created a tutorial on how to backtest stocks with Forex testers. So that article could be there. It's one article tutorial written by one of the members. It's going to help other members. It shouldn't be myself, the only one doing things. So that's going to be possible with this. Okay. Then the course is already finished. So we've got all the courses here, the lessons, all that. But probably I'm going to be making a very big change. And the big change is that course obviously is going to be available to current members. For new members, I'm thinking of a way of having more interaction and all that. So having the course available for this very small money that I'm charging, it's not a good idea anymore. I've been plagiarized many times. I mean, I mentioned many of the times when I was plagiarized in the community. I'm not longer doing it because they keep on doing it and doing it and doing it. I'm just fed up with it. So I'm looking more on an approach where interaction will be the way to learn. And obviously the course will be there, but will be like, in order to avoid and prevent plagiarizers, it's going to be expensive. I don't know if you are following me. I'm trying to protect what I'm doing because I believe that what I'm doing is good. And you can see it. Okay? This is not, I don't think that I am a charlatan. You can see that what I'm doing is done. The trades that I'm calling, the analysis that I'm doing are called way before they happen. And it's not way before happening, months, years before they happen. So it's not like after the fact type of trading where anybody can create a strategy. So this is what I'm doing. And I will be able to do many things like, for example, weekly peaks. I'm testing this. So, for example, if this week is a possibility for selling euro, dollar, and all that, I will be able to sort. If I go here to let's say to Forex, which is here, I go to the Aussie cross pairs. I go there. Okay. This is where I'm duplicating all the posts from the community here. Okay. So when we move to this community, we're going to have lots and lots of, I already posted like 1,800 posts. Okay. So the thing is that imagine that the Aussie dollar is good for this week. What do? I add a tag. Okay. Like for example, here, go to Forex, weekly picks. One sec. Weekly picks. You see, picks Forex. You see, that's the tag. I will be the only one that can add a tag. So I can say, what was the tag? I need to remember that. Picks Forex. So I go and say Picks Forex. And I save it. Okay. So now, when you log in the community, you go to Forex, weekly picks. I usually do it with the chopping list, okay, with the yellow pairs and all that. So I no longer need to do that because when I click on weekly picks, and now it's not working, I don't know why. You see, that's why I need to work on the site. So to see, or maybe it's a cron job in the background trying to pull it. Well, the thing is that when I do that, picks, okay, let me see, 1 second. When I try to demonstrate what I'm doing, then usually things do not work. That happens always. Yeah, correct, Amit. So picks for it. Well, I don't know why it's not working, but it should be working because I made it work on the euro dollar. So if I go to the euro dollar, it's there. So I need to, there's a lot of things that I need to do. So, but the idea is to have that over there. So then there will be there will be a section for downloads with indicators and things that I have created, PDFs, whatever. There will be tutorials, the ones that I mentioned already. There will be also on store the courses. For those that, because like I said, the thing is that I'm trying to create to differentiate between being a member and the course. So I don't know. I don't really know how to do it. It's a very complex, very difficult decision, Amit, because the thing is that I am being contacted every day by many people, and most of them are from undeveloped countries, unluckily, okay? They don't have the money to buy the course and all that. But when they do, they buy it and then they sell it everywhere. I've seen people selling my course for $2,500 on Instagram. Crazy. I'm not selling my course for that money. It's crazy. So it's like these guys, I found a guy that was looking for people to buy my course and then divide the expenses and sell it for, $500, something like that. So I'm trying to protect what I've done. So what I wanted to do right now, I don't know how to do it really. Is like maybe having like right now 65 euros a month, but then you won't be able to read the courses, you won't be able to read the rules, you won't be able to watch the video analysis. You will be able to see what I say, but you won't be able to interact or read other people's posts. That can be done with the community, with this one software. But I don't know if it is the right approach or not. So I sorry for the word, I have no fucking idea how to continue, how to do it. I have no idea. I want to protect what I've done. Or I'm already unprotected by many Russian, Chinese guys that are selling my stuff and people from Saudi Arabia, South Africa, but I don't really know. So I'm working on adding more content, tutorials and all that so that the new community is populated with a lot of stuff and interaction and all that, but I don't know how to do it, really. I don't know. So here we're gonna have the ideas and suggestions, the training channels, learning center where you're going to have the core strategy, newbies, practicing the rules. That's going to be, I'm going to have the blog section. Every member will have the possibility to have his own blog, his own place where he will be able to post his trades. There will be something that these guys call clubs. So we are going to be able to create, like imagine, a club for option traders. So only people that are invited there or that I see are contributing enough will be allowed in. It's not, okay, you pay me, you are allowed in the options channel. No. Okay? No. So, yeah, I was thinking, believe me, by reading only people will become expert. They are living in fool's paradise. No one can explain like you. But it's very complicated. But like I said, I sort of want people to interact more, but when you do interact, you are going to learn much more than just by reading me. But right now, I don't have any idea how to follow I will not launch the new service, the new community, until I can come up with a solution to this problem that I have. So if you have any ideas, you watch this webinar and you were not here online, you have any ideas, I will be listening to you, because I have no idea how to continue, really, because I don't want to sell my services very expensive. I want to help as much people as possible, but I don't want to do what I've been doing until now. People are taking advantage of what I do, and then they are claiming that they did all this by themselves. It's just crazy. That makes me really, really, really hungry, because it's taking me a long time to come up with all this. So all those of us that are in a monthly subscription won't have access to everything. Yes, right now you will. If you are a member right now, I'm going to respect all that, Henry. It's for the new ones after I launch the community, the new one. So right now, no problem with that. Don't worry about it. Diego, you need a good lawyer to prosecute them. Well, no lawyer will be able to do that. Even in my own country, if I try to go against somebody that did what they did, in China, what do you think is going to happen if somebody from China, where there is no law, does this to me? It's impossible. Okay, no problem. Thanks, everyone. So, there are many other things here in the activity stream and in the support area and the blogs and the tutorials I would love to show you, but it's like, I will be able to have our picks here with articles, adding images. I will allow other members. Imagine that you have a great idea about a stock or whatever, and then you want to explain yourself, like you like writing, okay? And you want to write, this is just an example, okay? So you can upload images. So it's like growing a blog or an idea, picks for oil. So we can make an article and you are attaching maybe several charts from Exxon, Phillips, Chevron, and many other oil-related stocks. So you can add the article, I will moderate it and say, okay, so everybody can read it. So you will benefit from these potential trades that one of the members is doing. It's not just sharing a screenshot, saying monthly up, weekly up, longs are weekly every month, but you can talk a little bit. I will be doing that as well from time to time, doing more in-depth analysis of a sector or an industry, which is great. Like right now, it would be great to do an article about oil and gas stocks, because we have the crude oil rallying strongly, and very strong imbalances being created with 12 months demand in control. So it would be a good idea, but obviously this kind of article will only be available to members of the community, not the new ones, if I come up with any idea of how to sort of sort this thing out. I don't know, but well, I'm just giving you ideas, okay? Brian, maybe super upfront cost and it gets cheaper over months of memberships until reach. Yeah, that could be another idea, but if it is super upfront cost, then people will not join, that's for sure. So it's a very difficult problem, Brian. Oh well, it's there. I will not launch it until I have those things sorted out, but I can do anything I want with this software, so it's very open to anything, which is great. Amit, I have a question. Who are focal points other than you for the continuity? Who are focal points other than you? What do you mean? People, traders in the community? I don't understand your question, Amit. I mean, business-wise. Well, I'm working on that. I mean, I have no idea. It all started like nothing in the community because I wanted to protect myself from the attack from the largest OTA, Online Trading Academy. The story is long. You can read it in Forex Factory. But then it became a business, and now here we are. And now here we are. So let's see what happens. I don't know. What will happen to the community if you are not there? Well, I don't know. I need to think about that. I hope not to die in the next few weeks or months, but it's something I need to think about as well, Diego. No books to advise, Luca. There are no books that will help you understand the markets the way that I am showing you. No books on supply and demand, no books on this. What I recommend you is to watch these webinars over and over, ask questions, share analysis, and by correcting you, you will learn much more than reading any book. On no book, you are going to see these imbalances mentioned. You're going to see like talking about seasonal trading for futures. You're going to see about indicators, Bollinger Bands, fundamental analysis, all that crap that is useless. Well, it can be incorporated as an extra. Okay, if you want not to overcomplicate things, you shouldn't. But I think that is you can see that without looking at any indicator, any fundamental analysis, we can see even with such a huge event like the COVID-19, imbalances are holding so nicely. So that should tell you a lot about why I would not recommend you any book. I can't, because there are no books that will tell you about it. That's as simple as that. And that's everything, I believe, for today. It's been like 2 hours and 20 minutes, long webinar. Hopefully you will have understood some of the lessons and some of the ideas and the core concepts of supply and demand a little bit better, okay? And that's it. Thank you, Luca. And thank you everyone for being here. I will be uploading the webinar to the community soon, and you will be able to watch it again if you want to listen to my sexy voice again. Bye-bye. Have a great day. Have a good night. Bye.